this is the first time in history of this portfolio that I am fully invested, even though a recession might be looming over our heads. Let me explain. But before that, real quick, welcome to another episode in my value investing model portfolio series, where I invest real money with a value investing mindset to build up a track record over time. Today is the 8th episode, and like I said, this is the first time that this portfolio is fully invested. First, let me explain why I've decided to do so, even though a recession might be right around the corner. Second, I will update you all on all the transactions that happened between the last video and this one. And lastly, we'll compare my performance against the S&P 500. Enough introductions, let's get into it with first, why I am fully invested. Okay, this is an easy one. Like I said during the intro of this video, I am running this portfolio with a value investing mindset. Value investing is in principle the art of looking at companies as companies you want to own, companies that you understand, companies that you like. And then for these companies, you try to determine what they should be worth. And now we get to the entire crux of value investing. You try to pay less for a stock than it should intrinsically be worth. And that is the entire reasoning behind all these holdings in this portfolio. I believe I paid less for them than they should intrinsically be worth. I do not try to time the market. I do not try to predict what the Federal Reserve will do next. I apply a bottom-up approach. I look at individual companies, and when they're cheap, I buy them. And then sometimes when I did a good job and stocks become expensive, I will sell them again. It is literally that simple. This mentality is what has allowed me to buy Tesla recently for $100 per share, timing the dip perfectly. And this value investing mentality has also allowed me to sell Tesla at $200 per share, timing the top perfectly as well. So what I'm trying to say is this bottom-up approach thingy really works. In my opinion, the true value of companies is literally the only thing that value investors should focus on. The rest is just noise. So to get back to the question, why am I fully invested? Because I have seen enough value on the stock market to buy all the shares I can. It is literally that simple. Also, added bonus, because this portfolio gets monthly cash flows, I do not really have to think about reserving cash for buying the dip. Now with that one explained and crossed off the list, it's now time for all my transactions. And there are quite a few to get through. First up, I sold my remaining 10 shares of Academy Sports and Outdoors for almost $60 per share, meaning I made a €97 profit on initial €740 investment, so a 13% profit. Not a lot, but certainly not bad for just 4 months of investing work. I sold this position because the company was trading reasonably close to intrinsic value. So I mainly sold Academy Sports and Outdoors because I believe there are better opportunities out there. Like this one. Over the course of the last 2 weeks, I've bought 35 shares of Clearfield for an average price of about $61 per share. And with a total position of 50 shares of Clearfield, that means that this portfolio is currently 16% invested in the company. Be aware, you might see this position sizing increase significantly heading into the future, especially if the share price continues on dropping. After all, I am hella bullish on Clearfield. Watch this video linked in the top right corner to find out why. Next up, transaction number 3, I've added another 5 Google or Alphabet shares for a whopping $89 per share. And the total position has now grown to 25 shares, or almost 15% of the portfolio. Like I have reiterated in all of my past videos, I love Google as a company. And for these prices, which are effectively a sub 20 PE ratio, I will continue adding to the stock. Okay, so like I said, there were a lot of transactions between the last video and this one. My apologies for throwing all these numbers at you. But to me, it is of the utmost importance that you all can follow along in a very transparent manner. Now, quick cute puppy to increase those endorphins, because it is time for Transaction number 4. I sold a tiny part of my EURBMC position at $4.9 per share for a total of 100 shares. I wish I sold more with hindsight, because $5 seems to be reasonably close to the intrinsic value of this company. By the way, I pegged the intrinsic value of EURBMC at about $5 to $6 per share. This portfolio still holds 600 shares of EURBMC, or about 18% of the portfolio, and we are actually getting a very cute €50 dividend coming in April. Transaction number 5. I've sold an additional 2 of my original 10 Tesla shares for almost $197 per share. The portfolio still holds 5 Tesla shares, or about 6% of the portfolio, and with 2020 hindsight, I wish I sold this position entirely. But seeing the general direction of the market, and especially that of Tesla, we might be buying the company reasonably soon again. And trust me, I will be buying Tesla again if it comes close to the $100 mark. Transaction number 6, we sold an additional 35 shares of ASTS for almost $7 per share. Why? Well, originally we bought ASTS because it was the easiest swing trade of the century. A super obvious bottom on the technicals, and we were expecting catalyst in Q1 of 2023. Now the thesis has been slowly playing out since our original buy-in, hence why we are slowly selling our shares. ASTS still makes up 4% of the portfolio, but we will be selling those shares over the next couple of months. And lastly, transaction number 7, we bought an additional 10,000 shares of Base Resources. I have learned from my past mistakes, and this time around we have purchased these shares on the way more liquid Australian stock exchange instead of the London one. Fun fact, we are actually getting a very nice almost €400 dividend at the end of this month from Base Resources, which, and I do not want to brag too hard, is almost 10% from our initial investment. And those were all the transactions of the last couple of weeks. This is what the portfolio currently looks like, and it is very important to note we are fully invested. Or actually, we are more than fully invested. I had to use about €150 of margin to buy those Base Resources shares. I am not planning on using margin in this portfolio regularly, but in small amounts like this one, I honestly couldn't care less. Also, margin might be used in the future for dip buying opportunities. Time will tell. Anyways, now that you are completely up to date on the portfolio, it is time for the comparison. And honestly, this portfolio was doing so freaking well. I was outperforming the S&P 500 by about 16% just a couple of days ago. But now we're looking just at 2.4% profit and an overperformance of the S&P 500 of about 6.5%. Meaning a dollar cost average into the S&P 500 would have resulted in a loss of about 4%, while my portfolio profited about 2.5%. It sucks that we saw our previous profits evaporate this quickly, but such is the value investing lifestyle. Value investors, in essence, are contrarians, which, when you're right, results in very nice returns. But until they're proven right, a value investor might heavily underperform instead. So what I'm trying to say is we'll most likely see this under/overperformance figure fluctuate heavily going into the future. And honestly, I am okay with that. As long as at some point in the future, this figure will grow to become a huge positive figure. And that is everything I've prepared for you guys today. Time for a classic YouTuber disclaimer. While I am a registered financial advisor in the Netherlands, I do not have the legal capacity yet to give anyone investment advice. Therefore, this video and any other video on this YouTube channel can never be taken as financial advice. I cannot be held liable for the losses you make while trading according to my opinions. Please do your own due diligence. And with that said, thank you so much for watching. I love you all. Peace.